Your brand new iPhone deserves the best protection, and the iLune 3-Pack Screen Protector plus 3-Pack Camera Lens Protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Investors are pulling out of Bitcoin ETFs in droves as concerns over tariffs continue to weigh on the market. The latest numbers show a staggering $326 million being withdrawn from these funds, with many experts warning that this is just the beginning of a potential sell-off. Now, let's dive into what's happening and why it matters for investors looking at Bitcoin through the lens of these popular exchange-traded funds. The Bitcoin ETFs have become a go-to way for mainstream investors to get in on the action without having to buy physical coins. They've been a key driver of the recent price surge, with many of these funds seeing their holdings increase by tens or even hundreds of millions of dollars. But as we look at this latest data from the Bitcoin Bulletin, it's clear that investor sentiment is shifting. The withdrawal numbers are nothing short of alarming, and they're likely to send shockwaves through the market. This isn't just about a few investors getting cold feet, it's about a broader shift in confidence. When investors start pulling out en masse, it can create a self-reinforcing cycle that's hard to stop. The Bitcoin Bulletin has been tracking this trend closely, and we've seen how the price of Bitcoin responds when investor sentiment takes a turn for the worse. In times like these, it's essential to remember that diversification is key. While some investors may be pulling out of Bitcoin ETFs, others are still bullish on the market. It's crucial to maintain a long-term perspective and not make impulsive decisions based on short-term price movements. Now, let's take a closer look at what's driving this sell-off. The tariffs imposed by the U.S. government have been a major concern for investors, particularly those who see Bitcoin as a hedge against inflation or currency devaluation. As trade tensions escalate, it's becoming increasingly clear that these ETFs are not immune to the fallout. The Bitcoin Bulletin has been analyzing the impact of tariffs on the crypto market, and our data suggests that this sell-off is just one part of a broader pattern. When investors start to lose confidence in the markets, they tend to become risk-averse. And that's exactly what we're seeing here, a classic example of fear driving investment decisions. But here's the thing, even as investors are pulling out of Bitcoin ETFs, the actual price of Bitcoin remains unaffected. In fact, some analysts argue that this sell-off could be an opportunity for long-term holders to buy in at lower prices. The key is to stay informed and adapt your strategy as market conditions change. So what's next for the Bitcoin market? As we move forward, it's essential to remain vigilant and keep a close eye on investor sentiment. The Bitcoin Bulletin will continue to monitor this trend closely, bringing you updates and insights whenever there's new data to share. Remember, in times of uncertainty, knowledge is power, and with that comes opportunity. The future of the Bitcoin market remains uncertain, but one thing is clear. It's a story worth telling, and we'll be here to tell it every step of the way. Stay informed, stay vigilant, and above all, keep an eye on your investments. That's the way to ride out any storm, whether it's tariffs or anything else.